How can a stock market crash be avoided? Someone asked me this question the other day and I wanted to answer publicly because this is a very interesting question. Because every investor asks this question, right? We put a lot of money into stocks and we don't want to lose our money in a stock market crash. But the truth is, you cannot avoid a stock market crash. But you can follow a strategy that helps you get the best out of it. So let's see what we can do to be prepared for a stock market crash. First of all, don't try to time the market, because nobody could ever do that. Sure, some people get lucky occasionally, but it's not something you can predict. When there's a crash, nobody can predict it in advance, and nobody knows where is the bottom of it. This is the biggest delusion about investing in stocks. People think that they can predict a crash somehow and sell everything right before the crash and then later buy it back. You cannot do that. Because you don't know if the market will crash tomorrow or not. And when we are at the bottom, nobody knows that it's the bottom. We only know it months later when it's already too late. It's been proven many times that the most active investors who try to do it are losing the most money. If you don't do anything during a market crash, you will earn more money than most of the investors. Investing in stocks is not about who has better reflexes. It's not about who can react faster in a crash. It's about owning money-generating companies that are growing over the long term. So don't try to time the market. However, have some cash when the market is overvalued and buy more stocks when there is a panic. I think most people believe that you make the most money when there's a bull market, but this is not true. You can make the most money if you buy when everyone is selling. Just think about this. Last year, in March 2020, the S&P 500 fell 30% from its top, and I was buying stocks like crazy. Not because I knew where will be the bottom, but because I saw the stocks were really undervalued for no reason. So take a look at this chart. You can see my stock purchases marked with red dots. And here's the point. A few months later, around August, stocks were at the same level as before the crash. And people were saying, okay, we are in a bull market now. So who made the most money? People who sold their stocks in the crash and later bought them back, or people who bought stocks in the crash like me? And this is what we can learn from this. When everyone is greedy, like today, and stocks are overvalued, it's better to keep some cash. It's not that we need to go all cash, because that's not a good idea, but have some cash and don't buy like crazy today. And when there will be a panic and everyone is selling, we need to buy like crazy, because we make the most money when we buy stocks in a crash. We don't have to target the bottom. You can see that I didn't buy any stocks at the bottom, which was March 23, because I didn't know that it's the bottom. Nobody knows that. Another strategy you can follow is if you buy more non-cyclical stocks. Cyclical stocks are companies that are doing great when the economy is doing well, but they have a hard time in a recession, so they have less revenue. Cyclical stocks are, for example, restaurants, hotels, airlines, furniture, luxury clothing retailers, and automobile manufacturers. Non-cyclical stocks are companies that have a growing revenue even in a recession, like utilities, cosmetics like soap and toothpaste, foods and beverages and drugs. And you have to be careful with speculative assets. Now that the government printed a lot of money, people have a lot of money to spend, they buy everything. And I mean everything. This is why the price of some speculative assets has exploded, like Bitcoin and other cryptocurrencies, Pokemon cards, and even stocks that are worthless because the underlying company doesn't generate any revenue. But they say that even turkeys can fly in a strong wind. However, when there will be a recession, these speculative bubbles will crash the most. When people will lose their job, they won't put any money into these assets like Bitcoin. I'm not saying that we need to avoid all of these things completely. I own some Bitcoin, but it's only a tiny percentage of my money that I'm willing to lose. And you can invest in dividend growth stocks. It's been proven, and I made a video about this topic, why dividend matters. Dividend growth stocks tend to outperform other stocks. And not surprisingly, many of the dividend growth stocks are non-cyclical stocks, companies like Johnson & Johnson, Philip Morris, or Pepsi. And you have to stop reading the news. Most of the time, investing is not about being smart, but about avoiding being emotional. And this is especially true in a market crash. It's easy to be brave when everything is going up in prices like crazy, but most people lose it when there is a panic on the market. And you have to understand how the media works. It's not in their interest to provide you accurate information. They are not selling facts. They are selling your attention to advertisers. And the best way to get your attention is with fear. This is their strongest weapon. This is how they make money. And you can be sure that when there will be a market crash, the news will be all about you will lose money and it's a freaking end of the world and things like that. And even if it's 100% bullshit, nobody will ever hold them accountable. So when there's a market crash, just don't read the news. You won't get any value and you will be more frightened, and you might do stupid things with your long-term investments.